I quoted Phil Perlman in my note this morning.
You what?
I quoted Phil Perlman in my technical analysis note this morning. I didn't give him credit for it, though. I feel bad about it, but I just didn't want to distract from the message,
So you didn't quote him.
I quoted him because it was his quote, but I didn't be like, oh, as Phil Perlman says. I didn't do that because I thought it was too distracting, because then people were like, oh, who's Phil Perlman? Phil Perlman's this guy,
Okay.
So the whole thing is that Phil always says, because I ask him about like work-life balance, right? You're a father, like you have to, you work hard, but you want to be a good father, a good husband, like family. You want to have fun. You want to go to a baseball game or whatever. Like there's a balance, right? In theory. And Phil says there's no such thing as work-life balance. He says there's only decisions, right? There's only decisions. You got to make those decisions. And you got to do what you think is best at the time. And it's different for everybody. I don't know. I always kind of stuck with me. So when it comes to emerging markets and the outperformance from the from around the world over the United States, it's massive dislocation last year. And this year it's only accelerated. The S&P's up 1%. The NASDAQ is down 1%. Then you got like oil services up 34%, Latin America up 20-something%. Like these things, massive. So then it's like, all right, is there a balance, right? And to Phil's point, there's no such thing as that balance, whether in work-life balance or in the portfolio. There's only decisions. There's only allocations and the process that you have to make those decisions. I don't know. That's what I've been thinking about this morning.
Look, all I know is, I don't know much, but there appears to be a massive correlation between strength in emerging markets and strength in U.S. hockey. That's all that I know. I know
USA.
But I know that much.
Let me tell you something. Yeah. Think about this. The United States has the best hockey team in the world. In the world. Not the Russians, not the Canadians, not whoever else is good at hockey. I don't know anything about hockey. But the United States, math only. It's just facts. Facts only. The United States best hockey team in the world.
So I don't know. All right, we got Strazza. Let's start the show. Good morning, chat. Nice to see you guys. Hope you had a good weekend.
Morning.
Here we go.
Morning.
Hey guys.
What's up?
What a weekend. What a snowstorm. We're getting a blizzard up in here, Florida, man. You guys don't know having no blizzards down there.
No, thank God. Hopefully this is the last one of the season, I think, for you guys. Should be.
I'm going to Miami next week. I'm going to the beach with my fam.
Smart.
I'm out.
I've got I think a foot of snow outside right now. And it's
We're gonna meet up on Sunday at the Rejos thing.
Yeah. I'll go a day early.
I think Morgan wants to hang out too, believe it or not.
Morgan?
See. She says she wants to come out Sunday night, but we'll see.
Have her come. I think Rose is coming. We haven't got that far yet. I'm sure she is.
Yeah, she says, but we'll be in Miami for a week, bunch of kids. By then she'll probably be like, I'm over it. Get me out of here. I'm not going out. You go have fun. That's probably what's gonna happen. But we'll see. Maybe she'll surprise me.
I'll bet you it's an extra nice change of pace because you're not just coming to the sunshine, but you're getting away from the snow. Nice little break from winter.
I don't mind the snow. I don't mind the snow.
Yeah, but to get away from it for a week, it's good. It's good.
It's great. Get some sun. Look how pale I am, dude. I look terrible.
Shouldn't be so
fucking
pale.
Ghost.
Get out there. Go shovel some snow.
Dude, terrible. By the way, I'm just saying people are starting to hear about this weaker dollar. I don't know if you heard.
Yeah. Well,
people know, Strazza. Remember before it was just like us talking about it? Right?
Yeah.
And we would be talking about it every day and we're like, oh my God, imagine if, the dollar goes down. Like, think about the implications and think about the things that are going to go up. And we bought those things and everybody made a lot of money and it was great. But nobody wanted to hear that. Nobody wanted to hear about emerging markets and metals and a weaker dollar because the dollar was so strong. Like, nobody wanted to hear anything about that. Yeah. Now it's the opposite, Strazza. Now they're telling me. They're like, JC, let me explain to you what's happening with the dollar. I'm like, oh, yeah, tell me more. JC, but you have to understand, money has been rotating to the other areas of the world, JC. You don't understand. I'm like, oh yeah, tell me more. Right? So like now they're mansplaining to me what we've been seeing for quite some time.
No, that's great. And I kind of feel in the same way, right? The stuff on TV, the stuff I'm reading in the papers, I haven't really heard from too many people saying this yet, but it seems like this international rotation story is very much, what do you call it? Front page news right now. So I wonder, I mean, what do you think? Next move higher for the dollar, a little bit of cool off, a little bit of mean reversion in these rotational trends makes a ton of sense here. Talking about short-term stuff.
I'm having a hard time disagreeing with you, Strazza. I'm having a hard time disagreeing with you.
A little give back, that's all.
Throw up the Barons. Throw up the Barons. This was a couple of weeks ago in The Economist, but throw up what happened on Saturday. We'll come back to this. So this was Saturday morning, Strazza. All the Twitterati's like, JC, did you see the Barons, JC? They're telling me.
Was it really? See, I don't like the Barons website because I was reading it this weekend and had no idea that this was the cover story. Because like if you go to Barons online, there should be a big cover there, especially if you're there on the weekend.
Here's the just for the for me, I'm a simple man.
Is that a black box?
Wait, I don't even know what that I don't even know what that means.
I don't understand the box. Why is the dollar in the box?
The dollar is going into a black box, I guess. I'm
more interested in. Can you zoom in there on the headline there? Dollar in decline. So now these are the journalists mansplaining to me how the dollar is in decline. Hello. The U.S. currency has lost its dominance. What investors should do now. All right, let's go.
Look out for a ripper. Thanks, Barons. We've seen this before.
All right, now go see what the geniuses at The Economist were saying a few weeks ago. So this is another interesting one.
Are you marking up dollar charts with that historic 2022 peak?
Come on, brother, man. You know me too well.
I want to see them.
They're coming. They're coming. This is too. Oh, there they are. There they are. There they are. So zoom in. Can you zoom in on the 2022 covers there? Wow. No, you go to the slide where it's go to the new slide 6 there. So you could just see end of 22. You know what's really interesting about these is that you had the Bloomberg Business Week, can't stop, won't stop. The Fed has turned the U.S. dollar into a wrecking ball, and there's no end in sight to the carnage. That was October the 3rd. And Barron's a week later. Look at that. The powerful greenback, George Washington, jumping out of a dollar bill, wearing a tank top, flexing his biceps. The U.S. dollar near a 20-year high. Who it helps, who it hurts, and 8 ways to invest. And now, look at that. George Washington. You got tickets to the gun show? You know, what's really interesting is that the dollar peaked a week before this. The dollar had actually already peaked the last week of September, which is hilarious that by the time the journalists were telling us. So now, you got The Economist a couple of weeks ago with the treacherous U.S. dollar, Strazza. The treacherous. So their headline was, the age of a treacherous falling dollar. Those holding American assets will have to get used to it. Okay. All right. Very, very angry over there. You better get used to it.
You know, these are just, I think, my favorite magazine covers of all time, the ones at the peak here. And also, in hindsight, the can't stop, won't stop, also a peak for P. Diddy.
All right, here we go.
Couple tops there.
Are we allowed to talk about P. Diddy?
Those are his, I mean, that's his line.
Yeah?
Yeah.
So for me, I mean, I think about these things and then throw up the actual dollar chart, that new slide 7. That's what the dollar looks like now. So for me, my issue has been, it's not that the dollar's weak because of some like Forex trick and conspiracy theory and some policy, mistake that needs to be solved. Like, I don't believe that that's what it is. I think the fact that the dollar's been going down is because nobody fucking wants the dollar. It's a goddamn bull market. Why would they want to be in the safety of the United States dollar when you got fucking gold doubling and you got the S&P 500 ripping, NASDAQ doubling? Like, why would you want to be in dollars? It's a lack of necessity, in my opinion, right? Flip it on its head what everybody's saying. Oh, it's because this conspiracy theory about the dollar. That's why these assets are going up. No. Those assets are going up and nobody needs the dollar. That's why the dollar's been going down. So if that's the case, and something I might be saying might be some semblance of the truth, then if the dollar were to get stronger, now that everybody's telling us how weak the dollar is now, right? Before it was George Washington jumping out of a dollar bill, can't stop, won't stop. Now it's the opposite. So when they're telling me the same things we've been saying for 3 years, now I start to question, okay, now they're trying to tell me this. That's a different situation.
Hell yeah. No, I get it. I'm with you. So what's the trade, dog? Hey, Spencer, can you kick out the guy in the chat saying buy silver? Kick out anybody who's still talking about precious.
No.
Oh, I don't understand why you're such a hater.
No.
I don't know.
Not doing that.
I don't understand why you're such a hater. Like, first of all, this is America. I don't know if you heard, but we won the gold medal in hockey, right?
Shout out America.
Men and women. I didn't know we had a women's hockey team, but apparently we do, and they won the gold medal. Shout out to both the men and the women of America.
And they both beat Canada. Cheers.
Dude, shout out to Canada. Shout out to Canada. Seriously, you know I love Canada. Second best hockey country in the world. Second best. Love you guys.
The thing about America is just really good at being the best at things.
Well, that's not how we started.
Not the worst at anything, right?
That's not how we started the show off. We started the show by talking about emerging markets, right? So
let me ask you guys this, right? So if these trades are going to continue, Latin America, emerging markets, all these things are going to continue. You can throw up the news slide too there, Spencer Israel, and then we'll do a little state of the markets. But if this is going to continue, then what would a stronger dollar do to change these new trends? You got new 52-week highs from Latin America relative to the S&P 500, oil services, new 52-week highs. Would a stronger dollar be a bummer for this situation here?
Time frame. Right, it doesn't have to ruin these beautiful new primary uptrends, but I mean, when's the last time you got a corrective wave from a lot of these short dollar trades? So I think they're definitely in need for a cool off. That chart that you showed to Dixie, maybe at least heading back to that 100 level,
right,
would make sense. That a little bit of backing and filling here in the ex-US equities or commodities trades. A little backing and filling, a little corrective wave that would coincide with a Dixie back to or even through 100. And then ask me again.
All right, now how about this one?
Yeah, dude, so this ratio chart looks best. This looks a lot better than SPY EFA. By looks best, I mean it looks best in favor of XUS.
SPY EFA is a little messier, right? So strength towards EM, you're saying?
Yeah, totally. That's where you want to be.
Yeah.
Brazil.
Tell me this is not the chart of the chart of the year.
So
far.
Right?
Yeah.
I'm not saying it because I made it. I'm saying like this is the story, right? I just put it, visualized it nicely here, but like this is it, right?
Yeah, and you're right. We've been talking about this chart for a long time since it's base completed. But I'm seeing it on the Twitter all the time now.
Yep, they're telling me on the Twitter. I was on, I was in the DGen spaces last night, hearing crazy people saying insane things.
Like what? Like what? Like what?
It was really bad. I don't know. Some guy was really angry. And they were saying all kinds of sexist and racist things. It was really bad. It was terrible. And then so they're like, all right, JC, what do you think about the market? Right? Like, let's change the subject because this is terrible right now. So I was like, I don't have anything racist or sexist to say. And so I
hang out with. I don't think you have the best friends on the internet. I think you're hanging out in the wrong circles.
Late night when I'm charting, I listen to what the crazies are saying. And by the way, you know what they were telling me? The crazies, they were telling me
this process.
They were telling me it has been for years. They're telling me that that emerging markets, assets outside of U.S. stocks are winning. They weren't telling me that for years.
Yeah. All right. There you go. Good info.
All right, so we learn a little more about JC's process every week. We know it requires charts, it requires a glass of wine, it also requires some DGen Twitter Spaces. So it all goes into the formula. It all goes into the formula, and out comes.
Listen, I'm a man of the people. Yeah. You guys think I'm on like some high pedestal. What do they call them? Ivory towers, right? You think I'm a simple man. I am a man of the people. I want to know what the people are thinking, what they're saying. It's very helpful for me. By the way, there's terrible ideas coming out of those spaces, but there's good ideas too, and different perspective, and it's good for sentiment. Yeah, why not?
All right, let's do state of the markets. Let's talk about what's actually happening this morning.
I love how Spencer's like those other things we're talking about are not happening. Like,
Well,
let's just pretend.
You know what I mean. You know.
All of these things are happening. That's the beauty of it, folks. Some people talk about what should be happening or what might happen. We focus on what is happening. And I think it would behoove many other traders and investors of all time horizons to pay more attention to what is happening versus what theoretically should be happening based on information that may or may not have even happened.
Right? Yes, but it's way more fun to think about what might happen.
Well,
so
one thing we know for sure is that asset prices trend. So let's spend some time looking for trends, right? I think we do a good job of that here. So we got the Dow futures this morning. You know, I think I might need glasses, dude. For the first time in my life, I'm having to squint. I'm having to squint. It's not good. I've never had to squint in
down 0.4%. You okay? You happy?
No. I got it. Thanks.
I can read it for you.
No, but it's 49,478, right? So we're 500 points from Dow 50,000, down 200 on the day. S&P's down 1/3%. 6,900 for the S&P, continuing to hang in there pretty good. S&P's. NASDAQ 100 leading the way lower, down 0.5%, 24,950, down $1.20. 30-year bond futures up 1/3%, 117.5. Crude oil futures up 0.5%, 66.80 a barrel. 66.80 a barrel for crude oil. Do we see 70? Do we see 70 on this rally? Getting very close. Copper down 0.75% for 580. Copper 580 down 0.75%. Gold up almost 2%. 51.71. Gold hanging in there. Silver up another 4.6%. 86 and change. Silver hanging in there. Good. With the VIX still above 20. Up a smidge this morning. And in funny money land, Bitcoin down 1,200. Down 1,200 for Bitcoin. That's 66,350. Ethereum 1930, down 1.5%. Solana 81, down 2%. With the total crypto market cap, Mr. Spencer Israel, 2.26 trillion.
Everyone talks about the Sunday night crypto or Bitcoin dump. We're off the lows, so but
very much so.
Yeah.
Is everybody talking about this dump? I was a little.
Yeah, I mean, look on my timeline last night. Yeah, it's like 40%.
People were bugging.
Yeah.
You know, I liked how we retested those that anchored VWAP from the COVID low, from the late 22 lows. Strazza, we want to comment on that? That to me, that's got Steve Strazza written all over it. You love that anchored VWAP, I bet, huh?
Hell yeah. I mean, we're there, right? Prior cycle
highs. Throw it up. You guys have the Bitcoin chart with the anchored VWAP?
I don't. The guy's got it. But we tested the prior cycle highs. We're now testing the VWAP from the bear market lows. So this is as logical of a place to start sniffing out a bottom as any place on the Bitcoin chart. Doesn't mean it can't go lower, but I do think most people could look back in a couple weeks or a couple months and say, I didn't buy Bitcoin there at 60, 65. Yeah. That was the spot. Now we're back at 90. So I don't want to be that guy. That ain't going to happen. So let's see. And then you got a clear stop out. Like, look, if you want to be out of this trade with speed, you would have gotten taken out below the VWAP from just the pivot lows last night. If you want to let it dance a little, just use the lows from earlier this month. That's it. Those are your two levels. You're barely going to be hurt in the event you're wrong. Why not take a swing? You still hate it, Spencer? You know,
no. I'm laughing at the thought process of why didn't I buy it, because that's like every time this happens, I always like, why did I buy more Bitcoin? You know?
Carpenter's right. I'm gonna go get my
so here we are.
That's the level.
Well, as you said, here we are.
Yep. So that's the level. That's the anchored volume weighted average price going back to the lows. And just look at that. Right? I mean, we're right there now. So, you know, the higher probability outcome, you know, gun to my head, is that it sticks, right? And that just kind of further reiterates the implications of if it doesn't stick, that's a big problem. Like, you're looking at something more systemic here. You lose Bitcoin, and there's probably something more systemic going on in software and in private credit.
Well,
There's
The
a
whole
lot
growth,
going on here.
the whole
we know
growth
that
rate
there is.
gets blasted. From a risk appetite data perspective, is as important as anything. So if you're sitting here saying, I don't own Bitcoin, I'll bet you own Google, you should care about this.
Yeah, and normally I wouldn't be like, oh, this irrelevant rounding error of an asset has global macro systemic implications. In fact, I have been the first one to tell you consistently, everybody, that it doesn't fucking matter and it's irrelevant. But
it's information.
No,
currently,
not true.
In this market environment right now, right here, with its correlation to software, yes, it is as important to the global macro landscape as it has ever been in the history of Bitcoin. How about that? How about them apples?
Well, couldn't you just say
it's
Bitcoin?
not about right now. It's always the case. Forget the size of the Bitcoin market.
No.
All right. If Bitcoin crashes through this level here, it's clearly in a bear market. Have we ever seen a time where Bitcoin was in that kind of a bear market and stocks were not also in a bear market? That's why it's important.
I think its relationship with software.
No sense. The answer is no.
Reason.
What I was going to say was Bitcoin has and will probably always be a proxy for risk. So if you want to see risk on behavior,
but it hasn't in a long time since the existence of Bitcoin. The key
silver people.
Hold on. Listen to me. The culprit in a downtrend or a potential downtrend in something systemic in the markets has not been software ever since Bitcoin has existed.
Yes, that's true.
This is the first time that the potential culprit to a more severe market correction, which clearly would be software in this case, Bitcoin's relationship with software really shines and is exposed in this cycle because of that relationship and because software is the key culprit. That has never been the case. That's why I'm saying it's not that Bitcoin. Listen, maybe I'm being a little dramatic. Right? Bitcoin doesn't matter. It's irrelevant. It's only $1.5 trillion or whatever it is. In the whole scheme of things, with a $70 trillion U.S. stock market, $1 trillion is nothing. But it is like the 8th largest company in the world or something like that, or in the United States. So it's not completely irrelevant.
Well,
I just want to highlight that it's more important than ever because its relationship with software.
Aren't you the one that's always saying you're cautioning not to overthink intermarket relationships?
Yes, agreed.
Okay, all right. So maybe, just maybe, you're putting a little bit too much stock in this Bitcoin software correlation that we've seen.
I don't think I am. Okay. I think Bitcoin is as important to the global macro landscape today than it has ever been in its entire existence. I do not think that I'm overthinking that at all. I think that's just a fact.
Well, it's the bar is low for that. So saying it's more, saying it's that it's most important now. It's more important than it was 4 years ago. Sure, okay, but
I think there's a lot there. I do.
All right. No, he's
I've
not
never
saying
said that before.
No,
I've never said this before.
Hold on. He's not saying it's the most important. He's saying it's more important than it used to be, which isn't saying a whole lot.
And it's ever been. Than it's ever been.
Yeah, which is not saying a whole. That's a key difference there, right? So,
yep.
Okay. We all agree there are more important things in terms of.
I'm getting pictures from Kenny. Coming in from Vegas. Should we share some?
I was worried he wasn't going to get out of town in time for the snow, but I guess he made it. So good for him.
I think he left early Sunday, maybe.
Kenny, if you guys, by the way, speaking of Kenny, he's in Vegas right now. He'll be there all week. If you were not at his class on Saturday, he was live for like almost 3 hours, I think. Saturday, he went from like noon to 3 or no, it was 3.5 hours. I think he was live for. So I'll put the link up on the screen there if you want to get in. If you use that link, you'll get the replay of the class and you'll get complimentary access to his trading room through the end of March. So the next 5 or so weeks. So use that link and you'll get the class, the 3.5 hours from Saturday. Talked all about order execution. Especially the pre-market because there's no market there, and really just talked about the ins and outs of his strategy, how to use it every day, And as he said, he can spend 3 hours talking about one ticker, and he really can. So use that link, get the replay, get into Kenny's room for 5 weeks when you use that link.
Here, throw up the first couple of slides there.
Boy, is this he just said this to you?
This was last night.
I was gonna say it's 6 a.m. for Kenny. He's not awake.
Yeah, throw those up. Throw those
Nice.
up. Kenny Glick. You look who he's with. Throw up the new slide 3. Look who else he's with. So he's at the Paris. There it is. Hitthebid.com. I got to get me one of those hoodies.
I don't know who that is.
That was Kenny.
No.
Kenny Glick.
Yeah, but who's he with?
Kenny again.
Throw up. There it is.
Should I know who that is?
That's Jeanette. You don't know Jeanette Sims?
I know.
No, sorry.
She's awesome. She's from Alabama. She's cool.
Okay, she's from Alabama. That's awesome.
Dude,
Great.
she's Alabama. I texted her the other night. She's like, "Oh, I just got home from another Mardi Gras. I hope I'm not dead tomorrow."
Awesome.
Yeah. I wonder how far she lives from New Orleans. I don't know. But yeah.
All right.
She's cool. Alabama. Shout out Alabama.
All right. So no Kenny today or this week, really. Maybe Wednesday. We'll see. But we do have Stephen Weitzel in the house. And this was a special request from Steve Strazza last week. Strazza, why do you want to get Weitzel on the show?
Because Weitzel's a better golfer and Strazza has a man crush.
You're not allowed to talk about golf because you suck so bad. Stop it. Weitzel's here because you, sir, refuse to talk about fundamentals with me. And there's some stuff to say.
We talk about it all the time.
He wanted to talk about, look, we were both looking through this, what was it, Morgan Stanley report? Looking at the charts. We got some big ideas about these charts. So just come on the show and talk about it. And Dan, Rick, make sure the ones I sent this morning are in there too, because I think they had some really nice We're going to talk about fucking margins. I don't even know. We could talk about price to book. I have no idea where this conversation is going to go, but I'm excited.
JC, margins are not, it's not the thing you spread on toast. It's a different thing.
Yeah. I run a high margin business, sir. I understand.
Okay. Let's bring him out.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
What's up, boys?
What's up,
What's
my man?
going on? How we doing?
Dude,
How we doing?
I have no complaints at all. I have no complaints at all. And I know your kinds of complaints are the most first class complaints. Him and I are on the bus on the way. I think we were on our way to go get I think we were on a crawfish broil, right?
Yeah.
Oh, the crawfish boil, down in New Orleans,
Speaking of New Orleans. And he's like, man, I don't know what I'm going to do. I'm like, what is the problem? He's like, I'm going to be on like a 7-week trip with my family on this like beautiful RV. And then I got to play Pinehurst. And then like, I don't know if I'm going to be like ready because I'm not going to get enough rounds in. And like, it's like a good course and I want to play well. Like these are the kinds of problems that Stephen White.
So you got him. You got him out of order, right? So I played Pinehurst first, and then we went on the trip, and then I went to Pebble.
Right, that's
in September. Yeah, and I was worried that the status of the game wouldn't be exactly where I wanted.
How was it? Out of curiosity, how did it turn out for you?
I mean, it wasn't bad. I'll say this: my worst round was at Pebble. I played pretty well at Spyglass and at Spanish Bay. And so I was actually thinking about going out there again in September. So my Yellow Jackets play at Stanford this year.
Cool.
I was thinking about going out, staying at Pebble, playing some rounds, going to the game. But I remembered
be a little cold in September there.
Right, so let me tell you something. Listen.
No, it's good.
Okay.
You're from the South. We take college football very seriously, right?
Yeah.
You do. I do. Like, we bond there, right?
I
understand. But I was at a Stanford tailgate once. I went to one football game there. We were at a tailgate. There was a girl reading a book at the tailgate.
No, really?
She was reading a book. She was sitting there in the corner. I've never been to a tailgate party where there's a girl reading a book. I never.
That's bullshit.
But it's true story, Weitzel. So I'm just letting you know. Get ready. This ain't the South.
Well, I'm not going there for the tailgate. But when I was actually looking into making my reservations over this weekend, and they were telling me that there was limited availability for golf, and I'm going like, what's going on? Then I remembered, oh, Spanish Bay is getting shut down. They've got Gil Hanse coming in and redoing it. March the 17th is the day they're closing it, and they're going to reopen it next April because Pebble's hosting the
They
U.S.
probably
Open.
have they should have a hell of a St. Patrick's Day party that night when they close it down. Because why the hell not? They're renovating the whole
I would
place
think
anyway.
so. I'm gonna say if you've never been to Pebble Beach or like the Inn at Spanish Bay, you better put that on the list. You better put it on the list. So,
Hey, Steve, you
You
ever
know.
play at Tiburon?
no,
Playing there in a month. Hear great
No.
things.
the
Think
so
Tiburon in Bay Area?
It's in Naples. It's really nice. They do PGA Tour events there all
Oh,
the
the
time.
Tiburon in the Bay Area.
Yeah. so
Naples.
what I'm thinking.
Nicest course around.
I can I'll lob in some phone calls. Do we have? I don't know. Do we have any dates for the PA in May? Is
Yeah,
that
we
we're
do.
locked in.
Lob in some phone calls. I like what you did there. See?
well?
Steve,
So-
are you going to be in Miami Sunday night? We'll all get dinner.
Well,
Dinner
a
right
week,
here, Sunday
a week
night.
From the,
Dinner with
a
the
week
boys.
from this Sunday, right?
Yeah.
So I'm actually going to be.
Oh yeah,
I'm going to be in Destin the 5th through the 8th, and then I fly back to Atlanta, catch a connection to go down to Miami for Future Proof. So listen, if you're going to Future Proof, you need to reach out, holler, see if we can catch up while we're there. But Steve, of course, there's nothing more I would love to do than to have dinner with you on Sunday night, the 8th, if you're
Right.
there. But
We'll
for the PA in May,
Yeah.
presuming I'm in town, because I'm a busy man. I'm a busy man.
A lot of courses to play. Keeps you busy, right?
I'm about town, but
be there.
presuming it doesn't overlap with any of the other travel plans that I already have on the docket, we could try to get out to Troubadour, which would be quite special. If you're not familiar with the Troubadour, it's the real deal.
Yeah, come join us in May, but we're shutting it down soon because we don't want that many people. So if you're in, you're in. Let us know.
It's a tight group. It's a tight group, and I'm going to tell you, especially if you're a financial advisor, I get so much value out of these PA sessions. You're in the room with people who make a living running money, right? Either for themselves, they're professional traders like Sean and others. And then you just got people with great ideas. And the fact that we typically are able to, find some consensus views is kind of interesting because we don't all come from the exact same perspective, but the data don't lie. The data don't lie.
And we have a lot of fun too.
I was just going to say, all of that good stuff aside, it's just we have a blast.
All right, so we do a lot of technical analysis there, but my understanding is that you guys want to talk about margins and earnings. Do I have that right?
Well, I don't know if we're talking about margins or earnings, but Steve and I are on the phone together last week, and we're talking about the prep I'm doing for my show last Thursday, and we were talking about more fundamental things. And he tells me, he says, "This is why I love talking to you because JC will not talk to me about any of this stuff."
He left the show, Steve. I brought the.
No, I watched it. I watched it, and he just exited. He just exited stage left. It was ridiculous.
Rude.
He look.
Fucking guy. Yeah.
Bring him back on. All right, go ahead.
Stage here. Let's dive in. Put
Show
the
it to
charts up. Chart on. Same charts from last week, guys. Did you give him any?
Did I give him any?
No, right?
No,
Yeah.
I didn't give him any. No, I can throw something up there
No.
if I need to.
Charts from last week, please.
Yeah.
Let's see how long this takes. And the other thing, no, from last week.
This is what I'm talking about right here. That's a
My
bubble
God,
chart.
that was very busy.
Dude,
Okay,
I
I
love a good bubble chart.
No, that's a
I
good
wanna-
one. But that comes next. I'll say something
man.
about this Citrini wealth, not on my show. Okay? None of that Citrini wealth on my show. And Jamie, if you're listening, it's because you blew me off for drinks. Grew up with that guy.
Hey, I TLDR'd the article.
Mhm.
Which one?
Basically, it's just saying that AI is gonna. I TLDR'd on ChatGPT the article that Citrini wrote because everybody's like, "Oh, you have to read this." I'm like, "Well, I'm not reading that shit. You tell me what I need to know." Basically, it's just that like AI is like killing the jobs, and everybody thought AI was gonna change the world, and it increases profit, productivity. But people are gonna get fired. And it's gonna cause this huge recession. It's gonna drop the S&P 500, and it's not a recommendation or a prediction as it is a way to think. Is kind of like how they put it. That's how they hedge themselves. Like, oh, it's not a prediction. It's just a thought process, right? So that's what it is in case anybody needs to know.
I think it was written by AI. Anyway, go ahead. There we go. That's the one. Thank you. No, we want the pub. Give us the scatter plot, then this.
No.
Again.
Okay. All right.
Do you want to start here?
It doesn't matter to me. Like, so here's the takeaway from this chart, that on effectively every fundamental valuation measure that the street would use, whether it's PE, cyclically adjusted PE, dividend yield, or earnings yield spread, the market's expensive. But the market's been expensive. And so the story from my show last week and what you and I were talking about is that just because you get lofty valuations, it does not mean that the market is due for some sort of imminent downturn or correction, because periods of overvaluation can persist for a long time. Similarly, periods of undervaluation can persist for a long time. And so this is where we want to marry the fundamental view of equities are expensive with some sort of technical analysis, trend identification to help us understand, let's ride this pony as far as she can go, but understand that we got to get off and we got to try to find something else, because the likelihood that this continues at the pace that it's been on for the last 10, 15 years, I just don't think it's in the cards, because I don't think we're in a new paradigm.
So this chart's showing the forward PE coming from lows of 10 times earnings back at the financial crisis lows to more than double that today, around 22 times. And now if we flip it to the scatter plot, right? The scatter plot, one that I marked up and put the circle on, guys. Yeah,
there we go. There we go.
This is showing, comparing that same price to earnings ratio on the x-axis here with the S&P 500 total return, 5-year annualized on the y. What is it showing us?
Well, it shows us that there is a correlation between starting valuation and forward returns. And that when you start with lower valuations, your forward returns tend to be higher. When you start with higher valuations, that your forward returns tend to be lower. And so where we are today, we're some of the most expensive valuation levels that we've seen ever in the market, in that on a 5-year annualized basis going forward, in all the other periods of time that we've experienced, represented by those little gray dots on here, that absent the recent past, which you have circled there.
Yep.
Because we talked about how the market has been in a state of overvaluation, quote unquote, for the last number of years. But that hasn't meant that it's declined. But that in all other prior periods, that most of them fall below this linear regression. And as a matter of fact, most of them actually fall below zero. And so I think that that is a real risk for market participants who, to me, seem blindly willing to hold the S&P, to hold large cap U.S. equities when they're as expensive as they've ever been. They think they're infallible. And I think that's a mistake.
So people will say, Steve, what are you talking about? We've seen double-digit returns a handful of times just this past decade, coming off very, very high valuation levels. That will continue. You say no.
Yeah, I just don't think so. I think that if we're playing the odds, we want to try to find something where the starting valuations are more favorable. And so, I don't know if you have any other
International
charts.
stocks?
International, it could be value, it could be small. So there are other charts in this deck where they show the disparity between your high valuation, growth stocks and where like the lowest of the valuations are within the S&P, and it's a
Yeah.
pretty broad range.
I didn't get that
and
far, really? They showed
the-
like sector valuations?
No, they didn't show it at a sector level. They just had like this big cone where they went in and they plotted like, here's your average PE right now for the S&P is 22ish, but like the top end is quite elevated. It's in the 60s, 70s, 80s, and then your low end is down in the
Energy.
high
Materials.
single digits, low double digits. Yeah, and so is it a surprise that we're seeing rotation this year into the things that had lower starting PE multiples? I don't think it is. And so in the same way, there was another chart that I showed last Thursday that over the last 15 years, the S&P has annualized at 14% compared to the rest of the world has annualized at somewhere between 4 and 7. And so US has just beat the brakes off of everybody. There has been no competition and for an extended period of time. But I don't think that we should be surprised that that was the case, because your starting condition from 15 years ago was US equities were inexpensive. They were very cheap on an absolute basis. They were cheap on a relative basis.
Yeah.
Right. In the beginning of my career in the mid 2000s, nobody wanted to buy US stocks. Right. They sucked relative to international, relative to emerging markets, China. Yep. I remember the fundamental story. There you go. I love that. So we're looking left quadrant, or the left side of that slide there, where we see U.S. equities average 14% over the last 15 years, China at 4.4. But look at how that flipped for last year. Right now, it's still an above average year for U.S. equities, but they way underperform. But look year to date. And so if we get out 15 years from now, and we find that the annualized returns for these regions are inverted, and the U.S. annualized return over the next 15 years is 4.4, and EM and international is much higher, should we be surprised about that?
You shouldn't, but people will. And you know that because there's a lot of folks who never saw what you saw. They've been here for the last 10, 15 years, and it's U.S. over world, always large over small, always growth over value, always. And you're starting to hear for a while now stories around why that will never end. A lot of times it's margins. A lot of times, well, U.S. is where all the tech stocks, they should have the higher multiples. And we're explaining away the idea that this script could ever be flipped. I think that's a beautiful setup from a sentiment standpoint.
Yeah, people do. I mean, I feel like there are a lot of folks who just kind of have their head buried in the sand on this, and because every time over the last 8 to 10 years, where they've tried to reason with themselves, I do need to maintain this more disciplined allocation, or I need to look, elsewhere for lower valuation entries that are going to give me better returns going forward. That's been disappointing to them. Yeah. And so we are conditioned beings, Steve, and people don't enjoy being disappointed. And when they've had this thesis of owning U.S. growth stocks outperforming reiterated to them week after week, month after month, quarter after quarter, for years on end, it's very hard for them to turn away from that.
And what's more, I'll bet you a lot of money managers have taken this shot before. This is not an old story. My whole career, international stocks, you could get some of these regions, I don't know, 11, 12, 13 times earnings. They've been cheaper. They've been cheaper by a mile for a long time. So, but a lot of people have already took that swing, changed up their allocations, went heavy international. We had some false starts before and then got burned and said, fuck this, back to growth, back to US, back, it makes it even tougher. I'm going to play devil's advocate quick. Throw up the margin chart. A friend of the show, the guys over at Duality Research, they just do great work, unlike Citrini. And they sent me these charts this morning. And he said, Steve, I loved what you were talking about on Friday. Maybe a reason. And again, you can use sound logic to play devil's advocate. And it sounds really smart. I'll accept this answer to say, no, it's going to stay this way. He said, check out margins, right? So what it's showing here, every time the color changes, it's like in chronological order. So what you're seeing is slow and steady margin growth. And if you look at something more like a PEG ratio, this would come out more. And the valuations would look less overheated here. So what you're seeing is margin steadily increasing to about 15%. Most of the time, this goes back, 20 years? Most of the time, that margin growth, it's come from the mega caps, large cap tech, large cap growth. And it's flipped right now because all those margins are under pressure. Go listen to a Mag 7 earnings report. That's part of the big fears out here. These margins are coming down from sky high levels, right? They're already very high, but they are under pressure. At the same time, the other 490 or whatever stocks, next chart, are enjoying some really nice margin expansion, right? This is that story of, it's not the guys involved in the AI, it's the industrial companies using the AI and they're expanding their margins. So, this 100%. Is good, right? These are forward profit margins, even with the biggest stocks in the world, maybe having some margin trouble right now. Look, you can't argue with that, no?
Well, no. So listen, do
they have that in China? Do they have this in developed Europe? The Eurozone?
You don't think that European companies and Chinese companies are going to implement AI? I do. So first of all, we're coming off of a 2 to 3 year period where the market has got increasingly narrow, where the percentage of stocks that were outperforming the index had gotten down to historic lows, something similar to what we saw in the late 90s. Well, this year, the percentage of stocks that are outperforming the S&P is at like 65% or more. I don't think we should be surprised by that because periods of narrowness are typically followed by periods of broad outperformance where you've got a lot of dispersion, where I think that this is really similar to the internet bubble, is that in the 90s when the internet was a new thing and computers and all this infrastructure, it was expensive and only the largest companies could afford to implement it. And so they were the ones who had like a first mover advantage. However, all of this technology, it's subject to obsolescence. It becomes very cheap over time. And so by the time the internet bubble was bursting in 2000 and small caps had underperformed large caps substantially from the mid 90s through the peak of the NASDAQ in March of 2000. That's when that ratio bottomed.
Yep.
That from that point forward, the technology was getting cheap enough, even though it was several iterations old, that smaller companies could afford to buy it. They could implement it in their business.
Companies were being built on it. Some of the best companies of today built on the internet,
But so the companies that were able to they could finally afford the technology, build it into their business, they're the ones that realized the benefit of it, actually got to put it into motion. A lot of the leading companies that brought us that stuff, they didn't survive.
Cisco,
so in the same vein,
Intel, still below those old highs.
Right. But in the same vein today, Steve, if this AI revolution, like nobody should be saying that it's going to go away. I don't think we can fathom the ecosystem that AI is going to create and how our lives are going to revolve in and around it 20, 25 years from now.
Yep.
But I think a lot of the companies that are bringing us AI, they similarly will disappear because there's going to be margin compression. It's going to become a commodity, and all the companies that are bringing that to us, they're going to start fighting for market share. Prices will collapse. We'll find there's no margin there, but everybody who is going to use it and implement it into their business,
Sure.
their margins will expand. And so for that reason, I think we will continue to see outperformance from things like smalls, things like equal weight S&P 500. So equal weight S&P
Well,
is
right
up
now
over
the market.
6.5%, right, this year.
How much?
Equal weight S&P is up 6.5% year to date.
S&P's flat.
Cap weighted S&P, it's up just under 1%.
Yep.
And so don't be
Well, that's the
surprised to see
market.
that continue.
The market's reflecting the story that you're telling right now. If you tried to sell this story to somebody a year or two ago, they would have said, "You're crazy, dude. The Mag 7s are the ones dominating AI, doing well off AI." And they were for several years. That was a great trade. But now this great rotation that we're seeing, that's the story playing out with the price action every day. Software down, big tech down, fucking value stocks cruising, international stocks up every day, right? So you're seeing it now. So I think this story is going to get a lot more popular, gain a lot of traction, and these trends will probably persist for a while on a primary trend basis. Right now, I think we're a little overheated.
Yeah, I mean, I kind of agree with you there that this year has gotten off to such a phenomenal start. If you own basically the field, if you've taken everything but the Mag 7, it's been a tremendous start to the year. Some of these value names have roared. International stocks have roared.
I like that. The field. That's good.
Yeah, I'm taking the field. And I almost want to pinch myself at how strong this year has started out. And you just know, like, what's going to potentially be the shot across the bow that derails this thing. I don't know, but if we is it going to be the tariffs? Hey, if the tariffs are gone, is it okay to get in the water and buy the international stocks now? Are we okay to do that now?
Notice how the market barely reacted to this news. Nothing like last year.
Here, the thing that I think was interesting.
Market needs more certainty and clarity, and especially around not just the magnitude, but the timing of this. This shit's going to be caught up in court. Sounds
I like that now you guys are coming back to what pays us, which is the prices of assets and the directions in which they are trending. So appreciate you guys bringing it back to reality.
JC, were you tuned in to our discussion?
Were you taking notes?
Did you learn anything?
Listen, I have to sit with our CFO and hear all this bullshit about our financials because I have to. I don't have to listen to you guys converse about valuations. I know that I've done the math. It doesn't matter. So can we throw up slide 2? Now that we're talking about the Mag 7 and everything like that, a couple of things interesting here. Since the inception of the Magnificent 7 ETF, which was in April of 23, Apple has gone straight down on a relative basis, right? Straight down. Just complete disaster. Since the inception of the Mag 7, Apple has massively underperformed. And then this is the one that's really interesting, inspired by one Axel Keybar. Shout out to the homie Axel Keybar. Axel, a chartered market technician. He's based out in Bulgaria.
Dude,
shout out to Axel. Been around for a long time.
This is the single best of any of the big cap techs for your money today. They got earnings Wednesday. This thing's gone nowhere since what? Q3, Q4 of last year. Still just putting up incredible numbers. All the other Mag 7s already reported and told us that they're still dumping money on this shit, whether the market likes it or not. That's all NVIDIA's money, baby. Got to buy this thing ahead of earnings. If you got no skin in this NVIDIA game, look at this. About to blow this thing out.
Sold to you, Steve.
No takers? Fine.
So,
what about
sold
Google?
to you? I'm going to say this: the setup in Apple to me is reasonable here, above those late 24 highs, 250-ish. So there was an interesting
slide 2 there. What about this one? Hold on. What about this one? Throw up the new slide 2. You guys are talking about the underperformers. I want to talk about something important. And it's the leaders. The market is a forward discounting mechanism, gentlemen. Forward-looking. Google looks better than NVIDIA, guys. Sorry.
You're not going to get any pushback from me on that. I will tell you, you've got a this is a great denominator to be up against right now.
True.
Put
Fair.
This is a great denominator. Hey, this is like going up against
Good point.
Georgia Tech basketball right now. You put anybody up against
Easy to look
Georgia
good.
Tech basketball, it's a dub.
You wouldn't put that football team in the same category though, with that fucking weird triple option shit you guys running? Like,
I don't like it.
football? Like,
I mean, we haven't
one
run
bit.
that in a while. Two, you're one to talk. You can't get by me, dog. You can't get by me.
sorry, I can't hear you because I was busy at the Natty. You know, I was just schmoozing with
How'd that go for you?
Hey, boys.
Let me tell you something.
Yeah.
It was quite an experience, Weitzel.
I'm sure it was.
If you ever make it to a national championship game, I know the probability is low, but hypothetically in that situation,
Yeah. Well,
you
I'm
make
definitely there.
it's worth.
Yeah, I'm there.
It's the bummer about it is that it's not like what you're used to. For example, like you're a big Georgia Tech fan and you're there, and the fans, and it's like a lot of alumni and then students, and it's the whole thing. National championship game is none of that. You know what I'm saying? Like, you're not getting any of those people. It's corporate as shit,
Yeah.
It's really
yeah.
fascinating to see two completely different animals in the same stadium. Because remember, that's the home stadium. So to see that, Trump and Rubio and Ivanka, I'm high-fiving Jimmy Johnson, like everybody was there. in the Canes games, these are guys from the hood, Little Haiti, that are there tailgating when the gates open. These are University of Miami alumni. God forbid a Florida State game, people are, dying in the parking lots. In this, you couldn't even get to the parking lot because the security was so tight. Like, that's the only bummer about the whole experience, to be perfectly honest with you. And you'd appreciate that.
So let me go back to your chart here, and I want to reiterate the fact that Google looks good relative to the rest of the Mag 7s. I don't think that that's a reason why you go out and buy Google necessarily. I think it says more about the condition of the Mag 7s. I would love to see this against the field.
By the way, I'm not poo-pooing your Apple situation. I think Apple looks pretty good, actually. It's kind of a bellwether of what we've been seeing in tech in general, which is kind of sideways.
So there was a Wall Street Journal article last week that I thought was really good, where they were comparing that of all of the Mag 7s, so outside of NVIDIA, right, who is really the recipient of a lot of this AI spend, but the Teslas, the Amazons, the Metas of the world that are spending hundreds of billions of dollars in CapEx.
Yeah, it's ridiculous. It's really great.
Apple is not.
No.
Apple is not. And
awesome.
so they're like, this is going to be a Harvard Business Review case study 30 years from now. They're going to look back and they're going to say, what did Apple know something? Did they know that this was a waste of their money to invest in this space, and the rest of them were punished for doing so? Or are they going to turn into Kodak because they rested on their laurels and they wouldn't invest in their future? I thought it was a very interesting concept.
I love that.
And then some smart ass is gonna raise his hand in the back. Be like, wasn't there like a guy trying to do a Bitcoin Ponzi scheme while that was happening, right? And like the case studies about because that's going to be its own case study on the MicroStrategy and how that all worked out. Like all of this is going to be in the same chapter of the curriculum. You know what I mean?
Apple has spent about 10% of these other Mag 7s. It's crazy how they have not participated. They've sat back, they've watched, they've built their own chips. And this is the same story about Apple 15 years ago. They're resting on their laurels. Somebody's going to, replace them. Never happened. They know that the iPhone ecosystem is so strong, they're going to be just fine. They don't have to overspend, take these big chances like that. Google had to. Google had no choice. Search is getting disrupted. AI is not making an iPhone. That's the difference. They knew they would.
Doesn't Google have a phone?
Nobody buys Google's phone. I don't think they do.
I think they do. They're just not Americans. And there's Apple protesters out there like, oh, we'll never have an Apple product. It's like a religion thing, I think. So then they get the Google one. I know people like that.
Oh, the Android? Are there still Androids? People still have Androids?
Yes.
You don't have the green bubble chats, Steve.
Oh,
Like when you
loser. Yeah.
dude, it is the worst. I'll tell you. So
I just
Mike,
learned that this was a thing, by the way. I didn't know that.
you didn't know about the green
this.
bubbles?
I've learned about it recently. I had never like realized that that's what that is.
It's a status.
Dude, yeah, and every time when you're starting a new group chat or something and it doesn't go out blue, you're like, oh my God. You're like, who is the offender here? Like, we've got to get rid of this person. So unfortunately, I have one of those people here at my office. And
They exist. Those are real people.
Fire 'em.
I'm trying to tell him, like, dude, we've got to get you an iPhone. Stop doing this. And he's like, listen, you guys have inferior technology.
Yeah.
So I don't know.
All right, Steven, thank you so much for joining us. You're going live Thursday, as you do every Thursday at 10 on this channel. By the way, if you missed last week's show, the first mailbag episode of $1 Million Question, check it out. There are some great questions that were asked and answered. So we'll see you Thursday.
Yep. I appreciate it. Thanks, boys. Have a good one.
Right.
Thanks, Steve.
Adios.
Later.
Before we hop, let's just bring on Sam. We're still in earnings season. Can you guys believe it?
30, dude. All right. Let's go.
I know, but I want to talk earnings. Don't we have a video this week? Pretty sure we do.
Yes,
So,
Wednesday.
Yeah, that's right. Let's talk
What's
about
Wednesday?
the video.
Oh, yeah.
Yeah.
Yo,
Hey,
happy
what's up?
Oh, Sammy baby. I'm seeing some of the worst investors that ever did it trying to fade biotech here.
Yeah, I'm sure that's going to work out well for them, JC.
Yeah, I don't think
Yeah.
so. These are some of the worst traders I've ever seen, and they're trying to fade biotech. You know how I keep tabs. You know how I roll.
So listen, Sam, you sent a bunch of images about earnings coming up. Want you to run through those. Tell us what you're saying.
Yeah, let me pull up my charts here. Yeah, so, yeah, how could we? What?
Green bubbles let me know when a peasant is texting me.
Dude, I know some of the brokest people I know have iPhones, dude. Come on. How is that a status symbol?
I don't know.
Every broke, everybody's got an iPhone. Like, I don't think if you choose to have
They don't though. Look at you'll see it. Pay attention, you'll see
So am
someone
I a
texting
peasant
me.
if I still have an iPhone 11?
No,
I mean,
no.
I'm just haven't had time to get a new phone. I need a new phone. I need a new.
Nice.
I have the
Wait.
purple one because it was cheaper. Also,
You got the purple one?
yeah.
Can we
got a
get
blue
Rick?
one. That's all I had.
Rick, can you just bring up slide 9 here, just to start with that, and then just set the stage? Okay, we have Nvidia Wednesday afternoon. We got some retail this week. We got some software this week. Yeah, there we go. Thank you.
I think that Salesforce report on Wednesday.
Yep.
You know, everybody's going to be talking about Nvidia, but I mean, Salesforce is just as important in my opinion. You know, it's one of the largest software stocks out there, a member of the Dow Jones Industrial Average, and
That's right.
it's a terrible, awful, no good, very bad stock right now. And you know, if software is going to find a bottom here, you want to see Salesforce not get blasted after earnings. And I have a feeling it very well could get blasted after earnings, but I think it would be a very big tell if you could see a double miss and a rally from Salesforce. You know, that would be really sweet. I think that is the most bullish scenario.
Problem is, totally, I'm with you, but you're not going to get a double miss from them. So what you're getting is double beats and poundings from all these software names. They're going to come out and beat. We know that. It's will they actually be rewarded for it? Unlike like any software company this quarter so far, that would be great.
Totally, yeah. I think that's an important one to watch, though. And Nvidia, of course, everybody's going to be talking about Nvidia. You know, Nvidia, it's just a range-bound mess right now, and it's been punished for 2 consecutive reports now. You know, kind of just reinforcing the range-bound, messy price action. You know, I don't think there's much to do here. I don't think there will be much to do here. You know,
Holding
I bet
on, though,
rallies
all
to
that
200
matters.
and gets faded. If I were a betting man, that's what I would say.
Really muted. You could see in the reaction score for 5 quarters now, not getting much, you know, in either direction off earnings. Maybe that changes, but honestly, probably not. I don't know what would do it, right? The problem with these Mag 7s at this point is the market has a really good read on where they're going to be each quarter. These companies are followed and watched more than anybody. You know what I mean? They're always putting out announcements, guidance. So it's hard to be surprised, but it's almost like, you know, NVIDIA's barely been reporting these past few quarters because you're not getting the moves that we used to.
But you're still seeing 60% top and bottom line growth from a $4 trillion stock. I mean, that is so absurd to me. Like, how is that
Market simply has to change its mind and say, yeah, we like NVIDIA again. We like the 60% growth again. They used to like it. I think they'll like it again. What else?
Yeah, we have. Yeah, I think the Home Depot and Lowe's situation is really interesting right now.
Totally.
So, you know, Home Depot really, you know, this is a gross chart, one of the grossest charts you'll find out of the large cap space.
Yep.
You know, just completely trendless here. But if you look at Lowe's, Lowe's is flirting with new all-time highs and breaking out to new multi-decade highs relative to Home Depot. So I think Lowe's, you know, I'm not really a pairs trader, but the Lowe's Home Depot pairs trade, you know, makes a lot of sense here. And you know, we're seeing it in these earnings scorecards that we put together as well. You know, Home Depot not being rewarded for earnings. But
that last one was a doozy.
Yeah, that was really nasty. The worst reaction score we've seen in years from the Home Depot. And it really wasn't that bad of a report. You know, that was the second consecutive quarter they had top and bottom line growth. We haven't seen that in a very long time from the Home Depot. You know, it's just kind of been there's been no growth there. But if you look at Lowe's, it's been rewarded for back-to-back earnings reports. Very, very different than the Home Depot. And you're seeing that in the technicals. You know, Lowe's, as I mentioned, flirting with new all-time highs, breaking out to new multi-decade highs relative to Home Depot. So I really like the Lowe's heading into this week.
Also, they're just kind of turning a corner here. I mean, surprisingly enough, Lowe's was, you could see it right here in the revenue growth column. You know, they had negative top line growth for, I don't know, a couple of years, and that's finally turning. I mean, you probably look at this and say 1%, 3% growth, not a big deal. Better than negative, right? It's better than moving backwards.
That's exactly right, Steve. And I love to see that right as it's climbing out of a massive accumulation pattern. Totally. I mean, those are the best setups out there. I mean, if you
probably cheaper too than Home Depot, usually trades at a little bit of a discount to Home Depot. Right now, if the fundamentals are better, the stock is cheaper, the chart is better. We're checking a lot of boxes here. Home builders have been hot.
100%. Yeah, I love the home builders. I mean, it's like many areas of the market right now. Home builders are very bifurcated, but I think there are great opportunities there.
Nice.
All right. Great stuff, Sam. If you want to get the daily beat, the link is on the screen. Sign up for free. It goes in every single day because there's earnings every single day. So that's pretty much why we do it every day. Huge week this week and next week, and then that'll be kind of the end of the heavy earnings flow. But we got to go. It's 9:39. Unless do you guys have recess you want to do? I don't know if you do. Maybe you don't. Maybe you do.
Go USA.
No?
Go USA. Go put on some trades. USA, best hockey team in the world, the best country for hockey in the entire planet, maybe even the galaxy, but I don't want to get ahead of myself.
Don't tell
Certainly
Sean.
this planet.
All right, let's go.
Yeah, all right. Send us your ticket request, chart request live, 1 o'clock today with Alfonso and Dan. Email your requests in or put them in the live chat, and the guys will answer your request live on the show. Thank you to Sam and Steven and everyone in the chat. We will see you tomorrow. Go make some money. All right? Good deal.
Adios.
I can't take no loss.